Greg. Thank you. It is time for Financial Focus. Steve Buden is here. And Steve, you and I have been crossing paths, or I guess we haven't been, for 2 months now. I haven't seen you in such a long time.
I know. It's been crazy. How was your summer?
It's been great.
Good.
A little vacation last week for me, and you had some vacation and time off as well.
School started today for my kids, so my summer's officially over.
Oh, man.
I know.
All right. Well, Steve, it's good to see you.
You too.
All right, let's talk Financial Focus. The first item on the agenda today, why China currency matters. They've been manipulating their currency lately. Yeah,
and all governments do this. The United States, the Eurozone, we've all talked about the currency fluctuations over the past. What's difficult this time with China is they're doing it at a very slow time of the year. The summer traditionally is pretty slow, so the moves they make tend to be more drastic. In addition, they're doing this on a daily basis. So the U.S. can manipulate their currency by the Federal Reserve raising or lowering interest rates, but the Chinese, they're communists, so the government just dictates this is what the yuan is going to be worth. And it can drive investors crazy because if you're going to be investing in China, well, let's say you have a manufacturing plant in China, excuse me, that takes years to build. If you have to export goods, it could drive your prices up or down just depending on the whim of the Chinese government. So the short-term moves really create the uncertainty in the market that investors don't like.
Essentially, we're all playing a guessing game, and with China being the world's second largest currency, I mean, that's a big factor for all of us.
When a large economy moves as quickly as China does, it just creates uncertainty. And as I've said before, markets hate uncertainty.
All right, something else that has been uncertain and ever-changing has been gasoline. Luckily for us, the price of oil has gone down, but it's not really translating to our pockets as far as gasoline is concerned, right?
That's right. And there's a big difference between drilling for the oil. The big choke point is the refining of the oil. So what happens is both in California and in the Midwest, you have some of these big oil companies have shut down their refineries for various upgrades. Now, if the refineries close down, you can't make gasoline, so that's what drives the prices up. And we always talk about how when oil prices go up, gas prices go up very fast. When oil prices come down, it doesn't seem to go as quickly. A lot of times it's because of the refineries. Now, there are many different plans for refineries on the blueprints across the United States, but reading over the weekend, it could take 3 years and 5,000 permits to get one of these things built. So maybe the EPA or somebody can get in there and give us some more freedom to build some more of these refineries. But you can pump as much oil as you want, but if they can't refine it into gasoline, the price won't come down.
Too many hoops to jump at this point. And from making gasoline to making eggs,
this is an interesting
chicken.
One. This is the beauty of the free market. I mentioned a couple of months ago, egg prices have really begun to rise. And I just bought some yesterday, and I couldn't believe how expensive it was. I thought it was for 2, not 1 dozen. People are actually out there renting chickens because it's almost as cheap to buy a chicken or rent the chicken, have them lay the eggs, and then also a lot of folks like the organic thing. So you know the chicken, you know where the eggs are coming from, and you create your own egg supply. But it just goes to show when prices go up, strange things happen. You could actually go out there and rent the chicken. So I guess you need a coop and you need some backyard space, but it is possible now.
Who knew? Creative business model, right?
I know.
All right, Steve, good to see you. Thanks.
You too.
Hey.